if you are buying gold right now, you might already be making a mistake. Most people who are rushing into gold have no idea that why they are buying it. We'll try to understand that what role does gold play in your portfolio, whether you should buy gold right now or not, and if yes, then we'll figure out that how much gold really makes sense. But before that, let's understand what is gold. Gold is a monetary asset. A monetary asset is an asset which does not produce any cash flow. For example, when you get into fixed income, you receive an interest. When you buy stocks, you receive dividends. And when you buy real estate, you receive rent. So all these payments that you receive in the form of interest, rent or dividends are nothing but cash flows. Gold does none of these. It does not produce any income. Instead, gold exists as a store of value. For thousands of years, gold has preserved the purchasing power across generations. Even the money that we hold today in the form of currency notes or in the form of money in a bank account, it represents trust. Historically, that trust was linked to gold. What I mean is that globally, gold is something which has the highest amount of trust and faith. Let's imagine a hypothetical scenario. Suppose the banks in your country collapse, the companies which are listed on the stock exchange collapse, the government collapses, the structures collapse, the system collapses. There is chaos everywhere and you don't even have food at home. Now, if you go out to buy food, no one is going to give you food in exchange of some currency notes or some shares in XYZ company or a bank statement showing deposits. In times of stress and chaos, trust in all these financial instruments disappear. And when trust disappears, all these assets lose value. They have no meaning. In such a scenario, people move to an asset which has the highest amount of faith and trust. And in today's world, it is gold. So gold becomes the medium of exchange. Such a scenario is like the society moving a few centuries backward. And this is why during times of stress, chaos and uncertainty, we see the prices of gold rising up. So let's try to understand why has gold rallied so much in the past year or so. So the central banks like Reserve Bank of India hold a lot of money in US treasuries. Basically, they have lent money to the US government and they earn a certain interest on it. Along with interest, they also expect the repayment of their initial money deposited. However, the rising uncertainty around the geopolitical scenario and the strength of dollar made the central banks question one thing. What if America is not able to pay my money back? When confidence weakens, diversification begins. So the central banks started to gradually move from treasuries to assets which they trust more. Gold becomes an attractive asset as it is nobody's liability. This shift combined with political uncertainty has been the reason for the rally that we have seen. So the question is this a good time to buy gold? Will the prices of gold continue to rise? Or will they start crashing? So structurally, nothing has changed. The uncertainty still exists. The geopolitical tensions still exist. The technological advancements which are happening rapidly, creating more uncertainty. And I think that gold has still a lot of upside left in it. But that doesn't mean that you go out and start buying gold left, right and center. The mistake that people do is that they forget about the context. Each individual has a different context. You need to understand what your context is and you need to take a decision based on that. So the first thing that you need to figure out is that what part of your total assets is comprised of gold. This gold could be the physical gold that you have in the form of jewelry. This gold could be in the form of gold ETFs, sovereign gold bonds or anything. Suppose you have 50 lakhs of total assets. You have 10 lakhs of stocks, 15 lakhs of fixed deposits and 25 lakhs worth of jewelry kept at your home. That means 50% of your net worth right now is in gold. Ideally, this percentage should be somewhere around 12 to 15%. So right now, you are already over allocated to gold. It does not make sense for you to buy more gold just because you see the prices rising, just because you have seen your friends making money on recent trades. It does not make sense for you to jump into gold. Rather, it makes sense at this point to reduce your exposure to gold. You are already getting a good price to sell your gold. You should reduce your exposure from that 50% and bring it down to at least 20 to 25%. So in this particular context, it makes sense for you to sell your gold. On the other hand, suppose you have 50 lakhs of total assets, you have 25 lakhs in stocks, 24 lakhs in fixed deposits and just 1 lakh in the form of gold. Ideally, you should be having 12 to 14% in gold which means in your 50 lakhs worth of portfolio, you should be having somewhere around 6 to 8 lakhs in gold. Now, this does not mean that you wake up tomorrow and buy gold worth of 5 lakhs. Investments should ideally be staggered, which means you can increase your allocation slowly over the next 3 to 4 months rather than jumping in it tomorrow. Yes, the prices may rise in the next 3 to 4 months and you might not get the best price which you are getting today, but this staggered investments also saves you from a scenario where you buy gold tomorrow and it starts falling from the next week, and in 2 weeks it corrects 10-15% and you panic within 2 weeks and you sell your gold. Staggered investments basically protects you from these emotional mistakes that you can make. So in this context, it makes sense for you to buy gold. Generic financial advice that we often see nowadays is often useless. No influencer or YouTuber will ever have context to your entire financial situation. There's only one person who will have context to your financial situation, and that is you. My goal is not to tell you what to buy and what not to buy, but to give you the right logic so that you can make better decisions for yourself. In the next video, we'll discuss about real estate, and if you want, you can check out my other videos on equity and fixed income. Thanks for listening.